Okay, gentlemen, our position is quite simple. There's a great opportunity developing to make some very, very serious money. And what I'm referring to, and we've talked about numerous times in the past, is a gold bubble. Basically, gold is a classical bubble right now with the expectations that it will crash, and it will crash down to the level of $600 to $700. What's important is for everybody to understand bubbles are frequent. Bubbles happen all the time. I just made a note of some of the most recent ones to establish that. Where crude crashed from $147 a barrel all the way down to the low 30s. And of course, prior to the crash, it was supposed to go to $200 a barrel because of bomb and all that stuff. We had wheat crashing from $13 a bushel to $5. We had the NASDAQ crashing from 4,882 to 800. We had platinum crashing from 2,300 an ounce to 800 an ounce. We had gold in the 1980s crashing from 850 after being down at $60 an ounce to the 300 or less level. And of course, the most recent and painful one, the collapse of the real estate market. What's interesting to people is to understand that all bubbles have common characteristics, if you know to look for them. The first characteristic is that their prices will be at record historical highs. That's an essential element of a bubble. The second thing is they've got to have all sorts of media focus combined with public adoration. Public adoration meaning people are loving that particular investment. Most important, they've got to be accompanied by statements such as, this is a new era, this time is different, it has to go higher. And unfortunately, people take those statements and comments as fact, when historically it's a big, huge danger sign, not a fact. Now, what's interesting is if you take those major characteristics, gold has them all. Absolutely all. It wasn't less than 10 years ago, gold was at $300 an ounce. It's now in the $1,500 to $1,600 per ounce level. Record historical prices. You also have media attention. Drive down the street and see how many gold shops are open that you never saw before. Turn on the news and what are they talking about? The price of gold, the price of silver, so on and so forth. And it has public adoration. Everybody believes it's going to ridiculous levels of, I've seen quotes of 5,000 an ounce, 10,000 an ounce, and there's always a reason why that has to happen. It's called a new era, a new time, this is different, so on and so forth. So you can clearly see that bubbles happen. They are historical. They present classical symptoms just prior to the crash. And you can see that gold currently has all of those characteristics in place. Another thing you can be aware of is that the move back to 600 to 700 is the minimum move. It will clearly go at least to 600 to 700 in our opinion. Now, what's interesting is most people will get hurt by this, not make money from it. And the reason for that is the only ones that are going to make money from anticipating, planning, and executing profit-taking strategies on the collapse of anything, but specifically gold, is those that know how to benefit from falling prices, commonly called a short campaign or shorting technique. So even if you believe that gold is going to crash, you have to go a step further. You have to figure out how you're going to benefit from that particular information. And that's the story, and that's the message that we're trying to get out. And we've talked about this numerous times. Now, when you're talking to people, what kind of questions are you running into, or what kind of rejections or assumptions are you hearing? Because they're out there, they're common.
How do we know this is the height? Can it go higher?
Absolutely, it can go higher. There's
Won't I
no
lose
question.
money if I invest now?
Well, when you plan a campaign, such as a short campaign, you never load up all your capital on one entry. You just don't do that. What you're planning is saying, I think this is the top, and it's just not a guess. There's certain indicators that we use. Yet at the same time you say, I'll be very patient with this, and I'll just put a little money at these levels. Now, if the high is not the 1576 or whatever, it's going to go higher. And of course you'll take a small loss on that initial position and still have your capital reserve. Picking tops is extremely difficult and very, very hard unless you put with the top picking some very clear, specific risk controls and money management. But it's not that difficult. You just need to be guided on it. So yes, of course it could go higher. Any other things you're hearing? Well, what I'm hearing is, well, gold just crashed to 1462 from the 1570s level. Is it over? Did we miss it? That's ridiculous. That's absolutely ridiculous. What we're saying is the 1570 some area is highly probable to be the top. And if it is, you need to exercise tremendous patience, and it's going to take about a year to a year and a half to unfold. And your target is $600 to $700 an ounce, not 1462. So even for those people, such as us, that have already started our short campaign, the mere fact that it fell to 1462 was of no excitement to us whatsoever. Our eyes are set on a whale. It's set on a whole lot more money to be made on this. But it does take coaching. You're going to have to familiarize yourself with how you're going to do this, what investment vehicle are you going to use, what money management strategies are you going to use. Not that difficult, but you need to be coached on it.
They say inflation is going to go higher. That will make gold go higher, won't it?
It could. But there is always it has to go higher because. When crude oil was flirting with the $150, it had to go higher because of China and the developing nations and all that. Well, guess what? It didn't. In 1980, gold, when it went from the $30 to $60 an ounce level all the way up to $850, had to go higher because, well, it didn't. And the list goes on and on and on. So the answer is, could it go higher? Yes. You just need to plan for it. You need to know how to handle that part. But the odds are overwhelming. The higher it goes, the more money you're going to make. Because it will retrace down to that $600 to $700 level. This is a golden opportunity to work with a small amount of risk capital and set a target to make rates of return that only come along infrequently. As an example, if you're using what is referred to as a 10-ounce gold contract available through the Forex market, you can acquire a position in that for around $300. That's all that's required that you put up. But you've got to have additional capital in your account to withstand what we call a couple whipsaws if it turns around and starts ripping up. Now that 10-ounce contract, that one by itself, if it falls all the way to $600 or $700 an ounce, well, you can do the math. From $1,600 to $700 is $900 per ounce times 10 ounces. It's a potential $9,000 profit. Most important, you better have patience and you better hold your ground. Don't be trying to time exits and re-entries and all that. This is not a trading strategy. This is a whale strategy designed to take advantage of an anticipated bubble. Anything else, gentlemen?